Well, good morning, and can I welcome everyone to this, the 34th and final meeting of the Public Audit Committee in 2025. The first item on the agenda is for committee members to agree or not to take agenda items 3 and 4 this morning in private. Are we agreed? We are agreed. Thank you. Our main agenda item this morning is consideration of the 2024-25 audit of the Scottish Government's consolidated accounts, which is a Section 22 report. I'm very pleased to welcome this morning to the committee the Auditor General, Stephen Boyle. Good morning. And he's joined this morning by Carol Grant, who is an Audit Director at Audit Scotland, and by Richard Smith, who is a Senior Audit Manager at Audit Scotland. We've got a wide range of questions for you this morning, Auditor General. But before we ask our questions, I would like to invite you to make a short opening statement.
Many thanks indeed, Convener, and good morning to the committee. I'm presenting this report on the 2024-25 audit of the Scottish Government's consolidated accounts under Section 22 of the Public Finance and Accountability Scotland Act 2000. The Scottish Government's annual consolidated accounts are a central part of its accountability to Parliament and the public. My independent audit opinions are unmodified, and this means that the accounts provide a true and fair view and meet legal and accounting requirements. There are a few areas in particular that I wanted to highlight to the committee from my report. The first is that the consolidated accounts report total expenditure of £56.3 billion, which is £1 billion less than budget, and that's mainly due to £2.2 billion of additional consequentials that were received from the UK Government during the year. This avoided the need for previously announced spending control measures and also the planned use of ScotWind revenues. In relation to financial sustainability, key financial documents were published earlier this year, but we've found that more detailed delivery plans are needed. We also note that the financial position of the Scottish public sector remains unsustainable. The Public Service Reform Strategy aims to accelerate workforce reforms, with significant changes also to public services planned. Our report also covers the rollout of Oracle Cloud for the Scottish Government and 32 other public bodies at a cost of £59.5 million. The Scottish Government must now demonstrate, following the introduction and implementation, that it's achieving value for money from the rollout of the system, together with the full realisation of anticipated benefits. Convener, the absence of a national performance framework currently means that the Scottish Government cannot yet clearly show that public spending is delivering the intended outcomes from the Scottish Government's priorities. With ongoing financial challenges, it's increasingly important that targeted spending is delivering maximum impact. I have continued to have strong impact in sponsorship. Effective sponsorship arrangements are essential to balance oversight, assurance and the responsibilities of accountable officers. The Scottish Government still has work to do to ensure consistent and effective sponsorship across its public bodies. In that regard, Convener, yesterday I published a Section 22 report on the 2024-25 audit of historic environment Scotland. It highlights unacceptable weaknesses in HES governance arrangements, including that the organisation operated without an accountable officer for almost 6 months. I, of course, recognise the committee's likely interest in the matters contained in that report, and I hope to have the opportunity to give evidence to the committee in detail in the coming weeks, when I'll be joined by both the appointed Auditor of Historic Environment Scotland and the Auditor of the Scottish Government. However, with that caveat, I'll do my best to answer any interest that the committee has in general terms this morning. And as ever, Convener, between Richard, Carol and myself, we'll do our utmost to answer the committee's questions. Thank you.
Thank you very much indeed. And yes, on your final point, I'm sure that we will take full evidence from you on that report that came out yesterday in due course. But nonetheless, we may have some questions this morning about some of the issues which are raised in that Section 22 report. Can I begin with one of the themes which came out when this report was published, which was there was some discussion around the levels of underspend I suppose my primary question is, do you think that the levels of underspend which are reflected in the consolidated accounts are, in your view, reasonable?
Yes, so thank you, Convener. I'll give you a response. Actually, I'll turn to Carol in a moment, actually, who might want to set out, I suppose, some of the detail behind the underspend, because the consolidated accounts themselves quite reasonably go into detail of underspend by department within the Scottish Government. So what they tend to record are variances to budget of around £5 million or more. The Scottish Government is required to break even. So it's the first point it's important to stress. And that means it cannot go into deficit. So in order to meet its financial requirements for its expenditure to be regular, it has to report a surplus each year. Historical trends, I've maybe passed to Carol to set out, but there has to be an underspend. And the final point I would say is, and that underspend is split both between revenue and capital balances. Just for completeness, before giving Carol an opportunity to set that out, the underspend is split between £875 million of revenue expenditure and a further £134 million of capital. So in overall terms, Convener, I would say that there will be, it is reasonable to have an underspend. The rationale for it will vary from one year to another by department. And most importantly, perhaps, is that not all the money is lost to the Scottish Government. The use, where these are effectively cash underspends, that money will be transferred into the Scotland Reserve. The detail of that precise figure, Carol may have actually, but it may become clear in due course. But I'll pause at that point and just turn to Carol to set some of that out in more detail.
Thank you, Auditor General. So, as Auditor General has said, the underspend is both the capital and resource elements to it. In terms of the resource underspend of the £875 million or 1.6%, that also included non-cash elements like financial transactions that were part of that. But the largest resource variances were detailed within our annual audit report at paragraph 62, and it related to the finance and local government portfolio, and that was a contingency that was held for those year-end adjustments, so those non-cash elements. There was also an underspend in the transport portfolio of about £200 million, and that was in relation to the trunk road network, ferries and also rail services. And the last was the social justice portfolio, which linked to social security assistance, but also spend and cladding, which I know has been of interest. The capital variances, in terms of percentage terms, it was higher at 5.3%, but £134 million in relation to the total underspend. And it was largely within the Deputy First Minister Economy and Gaelic portfolio, partly due to the Scottish National Investment Bank underspend within the year. In terms of the amount that's carried forward within the Scotland Reserve, within our annual audit report at paragraph 67, we go into a bit of detail in relation to the Scotland Reserve. And at the moment, on the back of the provisional outturn, the amount carried forward was £557 million that will be used in future budget years.
Okay. Can I just interrogate that a little bit more? Because social justice underspend of £164 million. Carol, are you saying that that is unspent money on cladding remediation, for example? Did you also say that's part of the social security budget? Or have I picked that up wrong?
So it is. So the social justice portfolio covers both social security and assistance. So not just the payments made, but also the Scottish Government team in terms of the delivery of social security, and also cladding remediation, as you said.
Yeah, because again, without getting us into policy areas, Parliament is going to be considering legislation which is about raising a levy to pay for cladding remediation. But what you're saying is, at the same time as Parliament is considering that, you are reporting to Parliament a significant underspend, including an underspend on funds that have been set aside to carry some of that work out.
So we are, Convener, I think, and I guess both things can be true at the same time, recognising that there will be some timing differences in the delivery of certain government priorities and projects. What we don't have, I suppose, is the detail in front of us today about what the totality of the project to deliver cladding remediation would cost. What we sought to do in kind of setting out that there are budget variances, our audit work focuses firstly on are those correctly presented? So are the transactions correct and can be relied upon? Essentially, as I mentioned in my opening statement, are they true and fair? The Principal Accountable Officer view is that the accounts present true and fairly the costs and transactions of the Scottish Government, and the audit work has confirmed that. But you're right, is that inevitably there will be both amounts that straddle more than one financial year, and that is, hopefully, as Carol set out, that money is not lost to the Scottish Government. But alongside that, if it's the Parliament's intention to support additional resources through taxation to deliver upon that programme.
Okay, but again, it's been a long-standing question raised by people like myself and I think Mr Simpson, that there were Barnett consequentials from action taken after the Grenfell Tower disaster, which were given to the Scottish Government and didn't appear to have been spent. And what you're really reporting today is that continues to be an outstanding area of underspend when, yes, people have got quite a lot of concerns, especially those who live in those buildings where cladding remediation is required. I'm going to move on to social security. And again, once again, there is a qualification on the audit regarding social security spending. Do you want to explain why that is? And also, my question would be, do you expect that to continue? And if so, for how long?
Yeah, happy to. I'll maybe start again, explain why there's a qualification, and I'll bring Carol in as well about some of the forward look around this, because social security powers aren't static. I think we've seen through the Scotland Act and the Fiscal Framework application of new powers have come to the Scottish Parliament. Indeed, the committee took evidence on my report on adult disability over the course of the past few months as being the largest component of the devolved social security powers to Scotland. What we set out in today's report on the Scottish Government consolidated accounts, and the consolidated is perhaps the important word here, convener, is that they reflect the transactions of the Scottish Government and those other bodies within the accounting boundary, one being the Agency of Social Security Scotland. So the Auditor of Social Security Scotland has qualified their regularity opinion because of what's an estimation of levels of fraud and error within the accounts of Social Security Scotland. And as we set out at paragraphs 6 and 7 of the report, this relates to an estimation of around £40 million of overpayments to claimants in Scotland for amounts that are still administered by DWP. Carol might want to touch a bit about kind of what's coming next in terms of Social Security Scotland's own powers and regulations to detect fraud and error, but these are benefits that are still administered by the DWP, and that would be Scotland's share of that estimated overpayment. The reason why it's a qualification, convener, is that fraud and error in every circumstance is deemed to be an irregular amount of public expenditure. So when Parliament set the Budget Act, it was to spend money as intended. Clearly, if there's fraud or error amounts, that is contrary to the Budget Act, and there's a qualification. What Carol, and then through in discussion with myself and Richard, have to do is to take a view, is that material in the context of the Scottish Government's annual report and accounts and our audit opinions? And we've deemed that it's not a material amount that would cause us to amend the opinion on the Scottish Government's consolidated accounts, but it's still important, and hence why we think it's still necessary to give it due cause and attention in both the Section 22 report and in the annual audit report. I'll bring Carol in, actually might want to say a bit more about either the generality or what comes next.
Thank you. So, as you asked, in terms of the size of the estimated overpayment for error and fraud within the DWP administered benefits, it is reducing, as you would expect, as case transfer happens, as more benefits are delivered and administered by Social Security Scotland. What that does is that increases the unknown element because there isn't the robust estimation processes yet in place for those benefits administered by Social Security Scotland. What the appointed auditor has drawn attention to within the annual audit report for Social Security Scotland, which is on our website at the moment, is that the next exercise in terms of the fraud and error estimation will be on the adult disability payment, and that feels a really important next step given the size of that benefit that's being administered. That should provide good insight into the levels of error and fraud that exist. As we discussed last year, the legislation is now in place to enable Social Security Scotland to require claimants to support the error and fraud processes, and that strengthens their arrangements to get a strong estimate round about the benefits that they're administering. What I would say is that the auditor has made a recommendation about the need for pace and focus in terms of this, and that has been accepted by Social Security Scotland.
Okay, thank you. And other members of the committee might want to ask questions on that part of the report. But can I move on to another area? One thing that really jumped out at me was a comment in the report about agency staff. And I think you cite one example, and presumably we can't name the department or identify who the person is, but you cite one example of somebody who I think was a former employee of the Scottish Government who came back on an agency basis, part-time, over 4 months, and billed the government £85,000 or more. I mean, do you think that's a common occurrence? Was that something that stood out and was an isolated incident? What's your take on that?
So we highlight it in the report, Convener, as an area that the Scottish Government needs to pay more attention to strengthen the controls and the approval arrangements for agency staff. Richard's looked at this area really closely, so I'll bring him in a second. But to address your points directly, we don't think this is a common occurrence, and our testing suggests that it is an isolated example. The Scottish Government view, as we went through the audit process, is that this arrangement, although expensive, could be justified because of the nature of skills that this person had were not able to be sourced in the market. And it was to work on a particular scheme that the committee will have some familiarity with, of the post-EU exit arrangements. They were providing expertise in part to mitigate the potential of fines that the Scottish Government might have incurred through that part of the post-EU arrangements. What our interest is that we don't think there was a sufficient level of oversight of these arrangements at very senior levels within the Scottish Government. And we draw a contrast, I suppose, to some of the arrangements that takes place within government for the approval of consultancy that does require more levels of seniority within the Scottish Government. So that is our, I think, is our assessment, Convener, and we're pleased. I think as we round off, and I'll certainly bring Richard in to come into it in a bit more detail. The Scottish Government's accepted our recommendation on this point. So we don't think it's a common occurrence, but it is noteworthy just the scale of expenditure that took place on this transaction. Richard.
Thank you, Auditor General. So yeah, as Auditor General highlights, this is an extreme case, and that's why we've pulled that out to kind of illustrate that point around the approval arrangements. So at the moment, the approval arrangements for agency engagement means that will be approved at Deputy Director level, and that's regardless of the daily rate of the individual, the length of the appointment, or what the potential total costs were. So in terms of this, obviously we won't name the individual, but in terms of this case, as Auditor General has already discussed, this was a specialist post. So this individual retired from the Scottish Government the 1st September 2023. At that point, there was no reason for either party to think they would be re-engaged with the Scottish Government. The understanding was they were leaving the Scottish Government for they had sufficient capacity internally. Subsequently, there was some changes within the Scottish Government that meant the expertise they thought they could apply to the European Structural Investment Funds close-down procedures wasn't available. They then investigated a number of options. From our discussions, we know that they looked at potentially seconding staff from elsewhere, looking at a fixed term, looking again at redeploying staff in the Scottish Government. And as we understand it, the difficulties they had was that as the UK Government were also going through the same process, there was just a really high demand for this type of expertise. So as I say, they were then engaged on the 20th of November 2023, initially for a 4-month basis, and this was approved at Deputy Director level, but this was then extended twice and ultimately ran until September 2024, so effectively they were there for 9 months, and the total cost of that appointment was £221,000. So the recommendation we've made around that is, as Auditor General says, in terms of consultancy, is a point at which that would be escalated to Director General and potentially Cabinet Secretary level for approval. And we are aware that the DG of Corporate was aware of this arrangement, but there wasn't any formal requirement for that to be approved. And we feel that that needs to be tightened up, and the Scottish Government have accepted that recommendation.
Wow. So in the report you speak about this individual earning, I use the term loosely, £85,000 for 4 months' work. You've just said that they earned £220,000 for 9 months' work. I mean, so there's supposed to be some kind of, A, there's supposed to be some kind of regularity, B, there's supposed to be some kind of value for money test applied here. How on earth does that constitute value for money?
So you're right, these are significant amounts of public expenditure, and a real difference between what the person was earning while they were a permanent employee of the Scottish Government. I think that really explains the rationale for why we think that it deserved public reporting. Yeah. That it was of such change of magnitude. And as we also set out in the report, that we don't think the approval arrangements were strong enough within the Scottish Government to have oversight and monitoring of this arrangement. As I said, Convener, that the Scottish Government, through our discussions, the audit team's discussion with them, were of the view that this did represent value for money. And I think on the one hand, whilst it may have augmented potentially very significant penalties that the Scottish Government incurred because of the specialist skills that this person was able to bring, we don't think that's strong enough of a case of justification. As Richard rightly says, we think it needed to have clear evidence of either Director General or indeed even ministerial oversight of such an arrangement.
Yeah, and obviously as a committee we will consider who else we might want to take evidence on this report from, up to and including the Permanent Secretary. So, but that's for us to decide. I'm conscious of the time, and there's just one other area I just wanted to raise with you, and that is about the industrial interventions, which are a feature of this year's report, as they have been in former years. And the government, in the course of the time, certainly I've been chairing this committee, has established a strategic commercial assets division, which has got express responsibility for oversight of these interventions, most obviously Ferguson Marine Port Glasgow, but also Loch Harbour, Glasgow Prestwick Airport, Burnt Island fabrications. Do you think that, in your view, the Strategic Commercial Assets Division is working effectively in ensuring value for money?
So I don't know if I've done enough evidence to give a definitive answer, yes or no, on that, Convener. I think what we'd say is that there are clearly stronger and more robust arrangements in place now than there were when these interventions first started. And indeed, actually, I think the creation of the Strategic Commercial Assets Division is in part a response to audit recommendations that there needed to be more of a structure around how this operates. I know that the committee has taken evidence from both the Director General for the Economy and his colleagues from the division on a number of occasions. From our perspective, I think, as I say at the report, we'll continue to track and monitor how that division is operating, the success, the value of these strategic interventions through our audit reporting. And as you rightly note, Convener, they've been a feature of Section 22 reports for a number of years. What I haven't done, I think, is directly back to your question, is say, and does this arrangement represent value for money? Is something we can give some thought to as part of our future work programme.
Okay, and certainly the Deputy Convener, who I'm going to turn to next, has got some questions on one of those projects. But I've got what I think will probably be my final question for now, a question about risk management. In paragraph 69, you say, risk management is key to the Scottish Government's assurance arrangements. What evidence have you seen that this is being applied to the relationship with the GFG alliance? Because, as we've previously noted, the GFG alliance is facing litigation because it has failed to lodge accounts with Companies House, including, I think, Alvance Aluminium based at Lochaber. It's facing investigation over suspected fraud, fraudulent training and money laundering by the Serious Fraud Office. Its auditors, King & King, resigned in 2022 following their concerns about the business. And just last week, MHA, part of the Baker Tilly International Group, also resigned as auditors from part of the GFG Alliance's subsidiary arrangements. Because they were concerned too about some intercompany interaction. I mean, in other words, this is a company which is riddled with question marks over its conduct and is facing litigation, facing investigation. Do you think that the Scottish Government has properly risk managed and understood the implications of the relationship that it's got with the GFG Alliance?
Yeah, thanks, Convener. I'll try and address all your points. I think I'm happy to talk in more detail about risk management generally across the piece on the Scottish Government, where I think we've given more assurance than I'm able to come on to offer you as it relates to the transaction with GFG Alliance in respect of Lochaber. You've obviously given a number of updates, Convener, on kind of where the current circumstances are. And I think it is largely, I think it remains the case that there are no auditors appointed, and that refinancing is still being pursued is the latest update that we have. We know that the Scottish Government has regular engagement with the Lochaber and GFG, and as ever they'll be better placed to give the committee an informed position of how the remaining circumstances are unfolding. The consolidated accounts, and I think in our own Section 22 report, reflects the current circumstances that somehow go to a degree to manage some of the financial risk exposure that sets out the valuation of the provision, currently £130 million. So we look at that very carefully during our audit work, and our assessment is that that's a reasonable balance. Much of the circumstances that are set out in the report and that the committee is very familiar with are to an extent legacy. And maybe go back to your earlier question, that there weren't robust enough arrangements in place, not just for the investment in Lochaber, but for some of the other interventions, for the Scottish Government to take a rounded view about the risks and rewards of its economic interventions. SCAD has gone a long way to addressing the lack of infrastructure and oversight, risk management engagement with which to track and monitor these. And I think it will be a matter for the Scottish Government to take a view as to whether they had adequate risk management arrangements in place when they first entered into this arrangement. I think what we've seen, Convener, is there's signs of progress, but I don't doubt for a minute that this is not where the Scottish Government would have wanted to find itself currently, had it had the benefit of hindsight when it first made the intervention a number of years ago. Okay,
and my final question then is, as the Auditor General, what's your view of a company which does not have auditors and has not filed accounts with Companies House?
I think I'm on record, actually. I think you asked a related question to this on either 12 months ago or the year before. Clearly, it's a very significant gap. All bodies, whether commercial, private sector or third sector, if they're required to do, should lodge their accounts, and if they're required to have an audit, to do so in good time. All bodies will want to demonstrate appropriate accountability either to their shareholders, their funders or the public, that they've used the money and the resources appropriately. So clearly there's a very significant gap in this example.
Thank you very much. And thanks for answering those questions. I'm now going to invite the Deputy Convener to put his questions to you. Jamie.
Thank you, Convener. Good morning, Auditor General. Good morning, guests. Can I carry on where the Convener left off in terms of the strategic commercial assets? It won't be a huge surprise. I'd like to talk about Ferguson Marine and the Glen Rosa, which features heavily in your report. First of all, Exhibit 1 on page 7, you talk about the total financial investment by the Scottish Government into the yard and its relative value. Can you just talk me through that? £360 million is invested, but the current value in the accounts is around £100 million. I suspect many people looking on from the outside into that business will wonder how on earth it could be valued at £100 million.
Yeah, so I'll bring Caroline actually might want to kind of set some of this out in detail, because there'll be some, I think what's set out here, there are differences in funding that have gone into the investment, and then how that's then reflected in investment accounting disclosures in the annual reporting account. So we ask Carol to start and I can come back in.
Thank you. So in terms of the detail that's in the Exhibit 1, the £99 million in relation to the value within the accounts includes £55 million for Glen Sannox that has now been transferred to CMAL. From last year, the movement in terms of the valuation, it has went from 94.6 up to 99 million, which means that the majority of the spend on Glen Rosa within the year, which was 41.1 million, has been impaired. So an impairment of 37.9 million out of that 41.1 million pounds that was spent.
So I guess what I'm asking, I suppose, is that if this business as a going concern was to be sold by the Scottish Government to a private company, so if I came along and said, right, I want to buy Ferguson Marine off you, what's the value of the business? Is it 99 million or is there another figure I should be looking at?
So I guess it will be, so this will be the valuation of the vessels. So
Right.
not necessarily the valuation of the business, which might include other factors. So, so there'll be an aspect of valuation of goodwill, for example, about the potential value or assets or aspects of a business that are harder to quantify. So that will clearly be a very material figure of these are the valuation of the vessels.
So we have to assume, therefore, that if once those projects are complete and the Glen Rosa's set sail and been handed over to its client, that will come off the balance sheet of the business. Essentially, it will just be a going concern without the CalMac CMAL contracts therein. So
yeah, just so hopefully to kind of, I can be able to set that out clearly. The valuation once the vessels are complete will sit with the owners of the vessels. So CMAL will sit with the valuation of the vessels. The valuation of Ferguson Marine Port Glasgow will be decided at another point, depending on, I think this the committee will, again, very familiar with about its future potential, its order book and other factors.
And will the business, would it come with any associated debt, according to your analysis of its accounts? In other words, has the government loaned the business money that someone would inherit that debt if they took the business over?
I'll check with colleagues actually just about that first of all, but what I may need to do is to check. I think they are due for completion imminently would be the up-to-date audited accounts of Ferguson Marine Port Glasgow, which I expect will be laid in Parliament over the course of the next few days for 24-25. Deputy Convener, that may allow me probably an opportunity to come back to you in writing just to see what the latest position is.
Okay, the Glen Rosa has now been forecast at costing £185 million. That's a figure I think it's reflected in your own report. Is there any understanding on your part that that will be covered by the Scottish Government? I mean, it seems to be, you make very specific reference in your report that, and I quote from paragraph 75, slippage and cost overruns represent a poor use of public money. It also seems to inhibit their ability to present proper accountable officer assessments of the costs of these projects. I mean, it seems, in layman's terms, the cost of this, looking at the table that you submitted, Exhibit 5, over the last 6 years, is just spiralling out of control with an unended price attached to the project. Is it your understanding that there's just simply a blank cheque available to get this job finished?
No, I think government have given evidence and suggested otherwise to the committee that there is not a blank cheque, and I think probably enough evidence to support some of the scrutiny that is going on by both SCAD, the Scottish Government, on the cost projections, together with the work of Ferguson Marine Port Glasgow's board and the oversight that it's subject to as well. You asked about certainty around some of these costs. I don't think, probably given some of the history that's set out in Exhibit 5, and notwithstanding what I've just said, is that we'll await the latest or the next set of projections to Parliament, both on the anticipated future cost and completion date of Glen Rosa. Again, as the committee will be aware, that I've committed to doing further public reporting on the completion of Glen Rosa that will capture, I guess, the totality of the process expenditure together with consideration of value for money arrangements. I don't want to miss the point you made, Deputy Convener, about accountable officer assessments, and maybe turn to Carol just to so that we can update the committee on our latest understanding on that point too.
Thank you.
So within the report, we outline that the process for the AO assessment was underway. I'll actually pass to Richard if that's okay, because he did the detailed work in the last couple of weeks in terms of looking at the revised AO assessment and the conclusions from that.
Yeah, so I think, Deputy Convener, you probably pulled out the main point, that the figures over the period shown in that exhibit have increased significantly, and so has the completion date. So I suppose that's quite a clear example where the accountable officer assessment process relies on there being an accurate completion date and accurate cost. Previously, obviously, it did show that completing the Glen Rosa at FMPG didn't represent value for money, and so at that point it needed ministerial approval. However, and it received that ministerial approval. However, we would argue that the process is still undermined, that if the Minister's been provided with a completion date and a figure that isn't accurate, then I think there was a question last year about where's the cut-off for that. So had they known when the first accountable officer assessment was completed that potentially the Glen Rosa wouldn't be delivered till June 2026 and the overall cost for both vessels would have been 334 million, that obviously it's a Minister's decision, but that might have influenced the decision made. So I think we're keen to make a kind of general point here around accountable officer assessments, that it's absolutely critical that what's in them is as accurate as possible. And even over the period from September 2025, from December 2024, when the last one was completed, and then the letter that was submitted advising of the later completion date, that's a significant movement in the completion date over that 6 months. They have recently just completed the latest accountable officer assessment, and that does now show that it does represent value for money to, at this stage, complete the Glen Rosa at FMPG, so that doesn't need ministerial approval. It satisfies the VFM test. And just on that, that also considers a scenario where the Glen Rosa wouldn't be delivered till December 2026, and also where the costs were additional 16.5 million over what's currently been advised, just to kind of risk assess that to say, well, even if it's pushed out to that date and that completion cost, it would still meet the VFM test at this stage. And obviously the Scottish Government can give you more information on that assessment. Yeah,
I mean, I find any assertion that any of this is value for money, you know, beyond the pale. £335 million for a £90 million contract is clearly not value for money. But I mean, my issue really is what faith can any of us have, either as a public audit committee, as a parliament, or you as Audit Scotland have, that any projections, either timelines or financial projections for the cost completion of the project, are going to be accurate, because they've never been accurate. The accountable officer has never had accurate information from day one. There's been slippage on the dates and the costs, which started at £110 million 6 years ago, 200, 220, 300, 335. I mean, where does it end, I guess, is my question. So what faith can we have that any estimates coming out of the business are accurate and reliable?
So we have to remain sceptical about that. About the projections, and I think, as Richard outlines, that even the accountable officer assessment, whilst the most up-to-date ones suggesting that it does represent value for money, and it's representing value for money to keep going, I think is the point, to keep going with the investment at Ferguson Marine Port Glasgow, rather than a wider value for money assessment of the totality of the project. even in some of our early reporting, Deputy Convener, we've been pretty clear that the final spend will not represent value for money. And similarly, we'll reserve that opportunity to comment again in full when we complete our final audit work at the point of handover of Glen Rosa. But I think scepticism is entirely valid, both on the final costs and on the completion date. And I'm sure, like the committee, we'll continue to track, both through our audit of Ferguson Marine Port Glasgow, the correspondence that comes to Parliament from the yard about the likely completion dates, and reserve that opportunity to complete our work during 2026.
Okay, thank you. Look forward to that. I'm going to move on. Sorry I took so much time on Ferguson and Glen Rosa, but it's an important area for the committee. I do want to move on to the bigger picture around Scotland's fiscal position and pick up some of what you said in your report and in your opening statement as well. As you mentioned, the Scottish Government has a requirement to break even, essentially, each year. But you talked a little bit with the convener about the £1 billion underspend. Is it my assertion correct that that was only made possible because of consequentials which arrived in year due to the UK government of around £2.2 billion, and therefore is it safe to assume that if £2.2 billion of consequentials arrived into the Scottish budget in year, and there was an underspend of £1 billion, then presumably about £1 billion of that was spent? Is that correct?
So the receipt of consequentials of just under £2.2 billion was so material that it allowed the Scottish Government to change tact in terms of delivering upon the difficult planned interventions and saving measures that had been expected. Together, I think it's an important reference, paragraph 22, what had been the planned use of the ScotWind revenues of £460 million. So that's another really important aspect of it. We go on to say, though, that because of kind of how public spending operates, decisions that are made, so if there's recurring spending decisions, typically through workforce and associated pay awards, we note that there are still financial pressures during the current financial year of 2025-26, and particularly note that financial balance still requires work within the Scottish Government, that many of the steps that are being planned to be delivered during the course of the current financial year to deliver financial balance either require upon, and I'll turn to Carol if you committee be interested in more detail in this, require non-recurring savings to be made or benefit from one-off measures. So really is why I repeat, I think in my opening remarks, a comment I've made multiple times about the sustainability of Scotland's public finances, drawing again on the Scottish Government's own publications, its own medium-term financial strategy that suggests that, by the end of the 29-30 financial year, there's a forecast revenue shortfall of £2.6 billion and a slightly smaller capital shortfall of £2.1 billion. Clearly, next month's budget and also the spending review are the opportunity for the government to set out in part how it intends to address those gaps. I'm happy to speak further, but maybe like to come back to, if the committee wish, about some of the strategies that were put forward over the course of the summer, in part to address some of this gap. But if you find it helpful, Deputy Convener, maybe turn to Carol.
I think we're quite.
If you're short for
time,
that's fine. Happy to
cover. Yeah, sorry, I do apologise. I guess I just want to interrogate a little bit further because there is often certainly in political speak that money is tight, times are tough, etc. And I think that's a message that the wider public will certainly perceive from how any government manages public spend. But I guess at the same time they'll be wondering how on earth money can be tight, but then there's such a huge underspend in the budget. And the question being is, could that money have been used or could still be used to avoid cuts or one-off savings in next year's budget? Which is a fair question.
No, absolutely, and it is. I think the important dynamic that exists in Scotland's public finances is the use of the Scotland Reserve. So that's available for underspends in one financial year to be carried forward into another, and to be used with the scrutiny of Parliament for the Government to set out its spending intentions. And as it has done so in previous years, when it has, within the parameters of the fiscal framework, to say how it intends to use the balances in the Scotland Reserve. I think, last thing I would say, of course, £1 billion is a very significant and an eye-catching figure in terms of an underspend. One of the points that we make in the report is that typically expenditure tends to happen by portfolio level within the Scottish Government. And we make the point about not all of government's priorities can be met by one department. So there are cross-cutting opportunities and cross-cutting risks. And there are opportunities for the Scottish Government to better manage, I think it's the general point we make, Deputy Convener, how it is delivering its priorities across different portfolios. So I think it's an important point that the Government has made in response to today's report and the recommendation that Carol and Richard make in the annual audit report, to commitment to review structures to deliver cross-cutting priorities. That might help, and I say might, in terms of delivering expenditure within some margin as close as possible to the totality of the budget that's approved by Parliament.
Could you explain what you mean on page 16 with the comment in bold in your report that the medium-term financial strategy highlights the unsustainable financial position of the Scottish public sector? That's quite a bold and sweeping statement. What do you mean by that, Auditor General?
So we mean the fact that, as I say, by the end of 29-30 financial year, the Scottish Government is forecasting that it will have a revenue gap of £2.6 billion. That is a significant figure that will require different spending choices or revenue-raising activities. So doing nothing is not an option.
Okay, that's interesting. So, in other words, the way out of that hole is to spend less or raise more money. Is that correct?
That's two of the options. The other is to reform public services,
right,
to change how public services are delivered. And I think that's why it's so important in the strategies that were produced over the course of the summer, public service reform strategy, fiscal sustainability delivery, and so forth, together with the NHS strategies that were produced to deliver upon those. These are the routes to addressing the unsustainable nature of public services, and I expect by extension, if they can deliver upon better outcomes for public spending.
Does public sector reform sound like cutting jobs in the public sector?
So that's part of it. I think the government have been clear on that they intend to reduce the public sector workforce. Our report includes some detail, together with statistics that were published yesterday, on public sector workforce numbers, an intention to reduce by 0.5% each year. Paragraph 54, today's report, draws on some of the content of the Fiscal Sustainability Delivery Plan workforce target to reduce by 0.5% on average per annum, but while protecting frontline services, savings between really quite a broad range of between £100 and £700 million per annum as part of that process. If you like, I think we have some detail further on the workforce statistics, but the government have been clear, yes, that they intend to reduce workforce numbers.
Right, interesting. Just going back to the point about how the government fills this, because it has to make ends meet, so it can't spend more than it has, clearly, with the exception of some capital borrowing opportunities, and you say that Scotland Reserve money, which could be potentially rolled over. So there's some wriggle room there in being able to dip into pots of money where it doesn't have it on the balance sheet. But I guess going back to the point about how the government could best resolve this, public sector reform, clearly one area. Making cuts, never popular for any government. But in terms of the other bit of it, the important bit about raising money, is that best achieved through simple tax raising, or are there other means of growing the economy, such as increasing the tax base or improving income from other types of taxation due to, for example, growth in the business sector, for example?
So I'll maybe refer to some of the reporting and evidence taking that taken place over the course of the past few weeks with the committee on our devolved taxes and fiscal sustainability report, where we looked at how some of the current arrangements exist with devolved taxes, particularly Scottish income tax, and the need for, well, first of all, better transparency about how that operates, improved public understanding really matters, but a better alignment between devolved taxes and economic growth aspirations, the National Strategy for Economic Transformation. The specifics of the fiscal framework, I think, inform the choices that will lead to the best result. So whilst an example that's given is, whilst growing GDP is an excellent thing for the economy in terms of economic growth, it won't necessarily translate into benefits through to the devolved taxes and specifically the Scottish budget. What really matters is growing the tax base, more taxpayers and in better paid jobs. That will have the biggest benefit through to the Scottish budget. So clearly these will be choices for the government, scrutinised by Parliament to make.
That sounds eminently sensible, Auditor General. The one other area I did want to touch on, which isn't in the report but very much linked to what you just said, and that's our net fiscal deficit for the year that we're looking in the consolidated accounts. It widened to 11.7% of GDP, which is more than twice the size of the UK average of 5.1, which does strike me as a bit of a concern. Equally, public expenditure in Scotland relative to GDP is 55%. Again, the UK average being about 44%. So we seem to be on a slightly different tangent in terms of these metrics. And I don't know if that's good, bad or indifferent. One could argue that we spend more on public services, therefore, of course, it's going to be a higher proportion of our budget. But that doesn't always make for better outcomes, does it?
So many of these will be a consequence of funding choices. You could track back to the fiscal framework, when that was created between the two governments, and we have moved on from almost that point. I think we also know that there are variations across the nations and regions of the UK in terms of the relative spend. What I think is particularly relevant to the point you make, Deputy Convener, in today's report is that it's not just about what's spent, but more importantly, what's actually achieved from that spending. And we emphasise the National Performance Framework and the national outcomes. The need for better reporting about what is public spending actually delivering. So we have something of a hiatus at the moment where the National Performance Framework is being reviewed. We understand that it will be into late summer, early autumn of next year before the revised National Performance Framework is fully refreshed. It's really important that timescale is met, because I think at the moment there's a significant gap in terms of parliamentary and public understanding of what's being achieved from the levels, whether they're different in different parts of the UK, but a real need for pace and progress on that.
And my final question, because I think others want to talk about the performance framework and outcomes, etc. And I think that's an interesting area that we'll cover. But other analysis tends to suggest that Scotland has an ageing and relatively unhealthy population, and that could present a potential risk to resource budgets in future in terms of meeting healthcare needs and support needs for a ageing workforce, essentially, which is not getting healthier. Has Audit Scotland undertaken any analysis in terms of more of a medium to longer term view of the Scottish public budget, and whether that is a trend that we should be concerned about and therefore flag to government?
So I think it's well documented, and I think particularly highlight to the committee the work of the Scottish Fiscal Commission in this respect. They have undertaken a number of activities that look to project, exactly as you suggest, into the medium and longer term about what demographics might mean. And clearly, the further out you go, the less certain some of those projections become. But that the fiscal gap that is of revenue terms of £2.6 billion to the end of this decade grows almost exponentially in years. I think they've taken the forecasts out to 2060, 2070 and beyond, Deputy Convener. So I think it speaks to all the more importance about some of the progress that's needed on balance around public service reform, the aspirations of those being met to set a really sustained and platform to address some of the wider both risks and opportunities that exist in terms of some of the demographic changes that are relevant to Scotland. And I should say, I think it's relevant that we in the report on devolved taxes and fiscal sustainability highlight that many of these factors are common, not just in Scotland but around the world. But that need for balance and planning to address the challenge of the future starts now.
Yep, as you say, doing nothing is not an option. That's interesting. Thank you, Convener.
OK, thank you very much indeed. I'm now going to invite Colin Beattie to put some questions to you. Colin.
Thank you, Convener. General, I'm going to have a look at a couple of points. One is back to value for money, but in this case relating to Oracle Cloud. Your report states that the Oracle Cloud was implemented at a total cost of £59.5 million, which is a wee bit higher than the initial estimate of £22 million. And that's without taking into account an additional cost for the enterprise performance management, which is estimated at the moment, I think, at about £1.8 million. This seems a very substantial overrun. In your report, you state that appropriate governance arrangements were in place. But to me, it doesn't seem that the governance could have been all that good if we're that far off the mark. Now, we've had the experience over the years of many government projects, often with sort of offshoots, if you like, from smaller organisations where implementation of this sort of thing goes skew-whiff. Now, my understanding was that the Scottish Government had put in place, actually, a process for giving support to smaller units within the government, which would not be expected necessarily to have the sort of resources in-house to be able to do this. What happened? Why did it go so far adrift?
So I'll start on this and bring Richard in, who, together with the team, looked really closely. I think we committed in last year's report to come back in our report today with the detail of what's a vital piece of investment that the Scottish Government has made. The committee, important to state that the system that was in operation wasn't fit for purpose. It brought significant functionality deficiencies together with cybersecurity risks. So this investment had to take place. As many other public bodies will also have to invest in digital capability over the next few years as part of the government's stated ambitions to transform the digital capability of Scotland's public services. We set out the timeline, and again, I'll turn to Richard maybe to set out some of that detail in Exhibit 2 for the committee. Perhaps he might also want to talk about some of the governance, some of the gateway arrangements that are inherent for large, complex projects. But I think you can perhaps sum this up, Mr. Beattie, at paragraph 27, where we say, that, perhaps to explain why the cost jumped, the Scottish Government underestimated the scale and complexity of the project, and it was subject to implementation delays. So the costs have jumped, as you outline, and there's still activity to be undertaken in respect of the enterprise performance management. That will continue during the course of 2026. So they're not yet in a position, and neither are we, to say that this project represents value for money. But I think what we are clear is that it's a project that had to happen. It had to happen to give the government the functionality, together with over 30 other public bodies, to take place. I think from our perspective, and if we can come back to both after Richard's said a word or two, but it's something that we'll continue to track during the course of our audit work next year and beyond. Richard.
Yeah, so I think Mr. B picking up the point on the costs. So yeah, I think we're clear the costs weren't well managed, and going from the original 22 million, I think now the Scottish Government would accept that wasn't a realistic estimate for the project, but even looking at the 46 million that was subsequently approved when the refreshed business case was taken in April 2024, there's obviously a significant overspend on that. So I suppose in terms of when we're talking about governance implementation, we reported last year on the cost overrun. We were looking specifically at the implementation process in terms of bringing in the system. I should say in all these judgments in Oracle, it's probably important to note that we're trying not to underestimate the scale and complexity of the project and what could have gone wrong. So putting the costs aside in terms of business continuity, the risks that it presented in terms of interest of the Scottish Government and 32 other public bodies, and we make reference to the fact that they did all successfully produce unqualified accounts this year, or audit accounts. In terms of where the cost overruns arose from, so I think the Scottish Government's advised that this was to do with an underestimation of the scale and complexity of the programme, and then also the implementation delays have contributed to that. We've been clear that as part of the post-project review, they should be looking in more detail at that. And one of the things we've flagged, and I think it's in a pop-out box in our Section 22 report, is about considering the impact of optimism bias, which is effectively assuming everything's going to run to plan. And I think clearly there's elements of this that they could have planned better for, they could have built more contingency in, and could have come up with, again, a more realistic cost for the introduction of the new system. We've also made the point around value for money, which has obviously been a theme already this morning, that at the moment the state the system's in, they've got an operational system, but it's important that there's a range of benefits that they can get from the new system over and above what was possible from the old system that the Auditor General said wasn't fit for purpose. But it's important they continue to focus on that and realise these benefits going forward. So we've looked at this very much as a long-term investment. So similar as you would for a capital project, you wouldn't look at just the benefits that arise in year one. It should be an investment that into the future should be delivering benefits to the Scottish public sector, both in terms of looking back at what's been spent, but more importantly, being able to target better expenditure, and also on a live basis, having live data of what's going on during the year and being able to take remedial action. So there is a lot of potential benefits which we set out in our annual audit report from this system, but it's not at the stage where they're being realised. So at the moment it's just moving into stabilisation, and then the next stage is optimisation. So basically they've got the system up and running, but now what can that deliver for the Scottish public sector in the longer term?
I don't think anybody's challenging the need for the system. It's really the implementation. You also say that the Scottish Government anticipated that Oracle Cloud will be in a stable state in autumn 2025. Do we know if that's actually happened? Is it now in a stable state?
I think they were just in the process of doing that assessment. So there's various gates that they need to satisfy to say that it's now reached stabilisation. And that allows, so some of this, apologies, is kind of IT jargon, but once it reaches a stabilisation point, that means they're confident enough that everything in the system is running satisfactorily that they can then start to move to the next stage of applying modifications and patches and enhancements to the system, and some of that as well as rolling out the EPM reporting modules that I've referred to. So officers of the Scottish Government will be able to advise if they've now, but my understanding was they are currently going through that process to assess are they now at stabilisation.
At what point was a red flag raised that the project was going off track?
So I think within that exhibit, you can see that the original full business case approved for 22 million was in April 2022. So at September 2023, there's a refreshed business case, and at that point, once they had selected Oracle as the preferred option, the budget obviously increased significantly to 46 million. There was then further increases in terms of the work required to deliver Oracle, but some of that did relate to the delays in implementation, and previously they had planned to implement it at the start of April, at the start of the 24-25 financial year, but they took the decision at that point that it wasn't in a stable and reliable point to be able to introduce that and have confidence it would operate satisfactorily. So that delay then did lead to further costs. So I suppose along that timeline you can see that there's been one very significant increase, and then obviously a fairly significant increase from the 46 million to the original 59 million.
I think I would maybe just add briefly that I guess one of the key judgments we make in today's report is that the original budget assumed cost of £22 million wasn't realistic. So it's not necessarily this is an example of a cost spiralling in a project. I think the biggest jump is actually from 22 that was assumed to the £46 million that's based on reliable, informed, market-driven costs of £46 million. And although costs have grown, this is a lot of money. I never underestimate that we're talking about public expenditure here. So although the costs have grown to £59.5 million and that the project needed to, has still some aspects to go to fully evidence the value for money, it's perhaps really right at the starting point that matters. And you can look at it two ways. One is that public money, public bodies should be absolutely clear and robust. That when they go, when they're going through consideration of projects. They've got an absolute full understanding of what a project could cost. But there is uncertainty also, is that market changes will inform. Many public bodies, many commercial bodies are all fishing in the same pool for new systems and suppliers to provide these services currently. So there's something of it being held to the realities of the market. What they had when they finally got it with £46 million, I think was the much more realistic figure with which to base expectations upon.
I suppose my concern is that looking back on other projects, there's this repetition of an unrealistic start point and an underestimation of the sheer scale and complexity of systems that are going to be put in. And I thought we'd put in place a robust process to ensure that you did not get that degree. I mean, there's always a bit of creep in costs, just the way it is, unfortunately. But this is really an exponential increase in costs. What can we learn from that initial point, which, in my opinion, should have been picked up as unrealistic at the very beginning?
It's an important point you make, actually. This is not new territory for public bodies, or certainly not this committee, in terms of IT projects costing longer, costing more, taking longer, and not quite delivering all the anticipated benefits. So there are stronger arrangements than if you maybe go back 10 years ago. I don't doubt that. I think we can say confidently that some of the governance and oversight is much improved. There are robust gateway and scrutiny processes across significant IT investment projects, to the extent that not all public IT projects will proceed. Some will reach a point with that scrutiny oversight that say actually it's a cheaper decision just to abandon the project than it is to continue with it. So I think in the round, the governance and oversight is improved. Some of the costs, as you say, Mr. Beattie, will be driven by market forces. But this won't be the last significant IT investment project. So we make, I think, the point at the report, paragraph 47, really consideration of how the project went is inherent in all major projects, whether it's IT or otherwise as part of the post-project implementation review. Richard rightly mentions that really tracking back, what were the reasons? So why was there a figure of £22 million rather than with the benefit of hindsight, what we now know should have been a much bigger? Was there optimism bias built into the project? What steps along the way worked really well? What didn't work well? But to, in a dispassionate, candid way, share that learning. Because the next opportunity, as we mentioned, is a new finance system, a shared system for NHS in Scotland. And there'll be many other systems that need to be implemented or upgraded across Scotland. That learning has to be shared really well and quickly across the public sector.
I guess my concern is we had all these projects before this project came forward, which had various degrees of difficulties. And as a response to that, the Scottish Government put in place support and a process that should have eliminated this, but it didn't happen. And I'm trying to get to the bottom of why it didn't happen here.
So I don't think you'll give a definitive answer until we do the post-project review as to what opportunities were missed, what factors were outside of the government's control, and what things went really well. I think as we've set out in the report, that's such a fundamental part of the next stage, together with realisation of all of the benefits of the project, to, in due course, I'm sure there's been the aspiration of the government to evidence that this has produced value for money. And it'll probably be a number of months before there is that level of analysis that says why we've got to where we've got to. From what we've seen from our audit work alongside the implementation, some bits went well. So we confidently say in the judgment that governance arrangements are effective. We're also pleased, as we set out in the report, that some of the additional assurance arrangements that required the presence of a service auditor, given the, how important this system is to over 30 public bodies, that process is being implemented. So there are some important aspects here, but is that the level of analysis, part of the project implementation, is such a vital next step.
I mean, you touched, for example, on the finance system for NHS Scotland, which is another fairly complex system coming down the road. Have we actually learned these lessons in this one so that we're not going to see the same again happening here?
So I think that'll be a question for the NHS and for the Scottish Government to give assurance on. I'm not in a position today to say that all lessons would be learned. Indeed, I think that would probably put an end to any future audit report on IT investment. Regrettably, in some circumstances, we don't learn lessons as public bodies, but we should never dismiss the opportunity to do so. And certainly, what we look to do in this section of the report is present a really rounded assessment. That some parts of this project haven't gone well. The project review will set more detail out as to behind that. But it can't be a barrier to trying and continuing to invest in digital. That to deliver part of the public service reform, address sustainability, deliver better outcomes has to be part of it. So that's an important reflection for the Scottish Government and for those bodies that are still to do this level of transformation, to make sure that they are harnessing the experience of previous projects.
And just looking forward here, the enterprise performance management, which at the moment is talking about £1.8 million, is there any way we can, is there a process in place to more closely manage that, more realistically manage it, so we don't end up with these exponential costs again?
So I'll maybe turn to Richard, actually, if we get any more detail on that.
So I can probably partly answer that question. Yeah, so at the moment, the costs of rolling out the EPM reporting modules that have been rolled out so far are 1.8 million, which covers releases between January and August 2025 on free releases. The way the EPM reporting modules understand it works is there is various different modules and different parts of that, each of which we need to be approved before it's rolled out. So for the next stage, so I think the Scottish Government term is the emergent plan, has work continuing until July 2026. There's planned releases for February and July 2026. But again, they would need a business case to be approved. Going back to our previous comments, though, there's an extent to which, in order to deliver the benefits from the new system, you do need to embrace some of these additional reporting functionality. So I think there's difficult decisions to be made in terms of it is going to be further investment, both in terms of monetary, but also investment of time for people to get up to speed with using the new system. And it's quite different to the way the old ledger system operated. So it's what they called service user led. So potentially there's lots of reporting functionality that can be enabled within the system, but that's only beneficial if people then utilise that and take full benefit of it. So in terms of going back to the cost question, that 1.8 million has been spent and committed to be spent. The next stages would again require approval before they're rolled out, and any subsequent updates or enhancements to Oracle again would go through the same approval process within the Scottish Government.
So we don't at this point actually know what the end cost is going to be?
No, and we've had quite long discussions with the Scottish Government about how do we quantify the implementation costs. And the only clean figure we really could have then was saying, well, up to October is 59.5 million, because they know the 1.8 million is what they've spent on the rollout of these releases, but they don't yet know what will be approved and then what will actually be spent on future releases. So we'd hope at some point during 25-26 we'll be able to give, in our annual audit report, we give an update on what's been spent during that year and subsequent releases. And also the other point that we were trying to get to was what the monthly running costs are. So since implementation of Oracle, they're around £1.6 million per month. But part of the reason for that is there hasn't been a stable period because the EPM is still being rolled out. The Scottish Government have advised that they expect these to reduce to around £0.9 million per month by the end of 25-26, once they've reached that stabilisation point and there's a bit more continuity in the system, so there's not still further enhancements being rolled out.
Okay, and just one last logical question on this. We've talked about the fact that this is an essential system and that it's going to deliver benefits. What indicators is the Scottish Government going to use to measure whether value for money has in fact been achieved.
Yeah, so the Scottish Government have already identified a number of potential benefits. So within our annual audit report, we'd actually gone through these and set out the reasons why we think at this stage they're not being delivered, which goes back to my previous comments, in order to show that the system delivers value for money. So around that would be lower maintenance costs compared to C's in the previous EHR system, operational efficiencies, better engagement and collaboration, both across the Scottish Government and with other areas of the public sector. It should support innovation and agility and link into that reform agenda in terms of informing, and this is one of the key aspects, I suppose, in terms of finance systems. You can always look back at what's happened previously, but the real benefits you get from it is learning from that and thinking about where you direct resources in the future. And also, there should be benefits for users and stakeholders in terms of improved user experience and efficiencies at that level. So at the moment, they're not realising these benefits. They're in the process of pulling together a benefits realisation plan that should set out how they'll measure that and how they'll effectively assure themselves that they are now getting those benefits. And as I say, that will be over a period of time, so that's not all going to come in 25-26, but you should be seeing that over a number of years, and it should be helping to influence both forward-looking decisions but also on-the-ground decisions, so where potential overspends are being identified at a much earlier stage and mitigating action can be taken throughout the year, which within the C system, with the best one in the world, was one of the major downfalls, that the reporting mechanisms weren't really fit for purpose. It took so long to get data out of the system.
I'd like to just finally have a quick touch on sponsorship, which is an old favourite that comes up so frequently. Looking at your report and the comments in your report, do you think that sponsorship teams are adequately equipped to challenge public bodies that are underperforming or failing to manage risks effectively?
I think it's an ongoing process within the Scottish Government to ensure effective sponsorship. I think what we see at the moment is some very good examples of sponsorship and then some other high-profile examples of where sponsorship hasn't worked well. Paragraph 61 of the report, Mr Beattie referenced the fact that the Scottish Government's Public Bodies Sponsorship Unit completed a review of the progress. The committee may recall of a previous review of sponsorship arrangements from 2022, and that they identified that there's still work to be done to fully embed effective sponsorship arrangements across the 125 public bodies that are aligned to the Director General oversight arrangements. And I think that's borne out by our own experience as well. We do see a variety of arrangements. Of course, this committee has looked at sponsorship examples in close detail. We reference the Water Industry Commissioner for Scotland in the report as well, and some of those wider responses, not just to the sponsorship of WICS, but how the Scottish Government sought to embed a better structure for sponsorship. So, as we set out some of those bullet points, paragraph 62, specialism for sponsorship, some of the peer support arrangements, some of the networks that would be required together with deep dives. I think these are all appropriate steps to iron out inconsistency of sponsorship arrangements, but I think, as I referenced in my opening remarks, there's clearly some progress still to be made.
Well, clearly there's a wide variety of effectiveness of sponsorship throughout the public area. But the problem is, how do you get that consistent approach? Because the Scottish Government is obviously trying to do that. Is it down to, at the end of the day, is it down to individuals? Is it down to how effective the person or persons at the front line are?
I think if it's down to individuals, that leads to variation. So I think what we've seen is the Scottish Government looking to create a more systematic set of arrangements that can provide, as I say, that sense of specialism, peer support networks, wider oversight, so that it's not down to the dynamic of the sponsor within the Scottish Government and the public body that they are engaging with. I don't think that model guarantees effective arrangements. So I think in overall terms we agree the assessment that the Public Bodies Unit has made about the progress against those earlier recommendations. As ever, it's that these recommendations are delivered, that they're embedded, so that when there are challenging examples of sponsorship, that the government finds itself not intervening too early, but not reacting, that it's got the right level of balance to ultimately support the organisation to deliver upon its objectives.
I'm not sure the importance of sponsorship is adequately understood throughout the system. How could Parliament and the public be better informed about how effective sponsorship arrangements are, particularly where the outcomes are not very good or risks are escalating within that unit?
So it's an important question, actually. So certainly through our own work, there's what we look to in today's report is to provide commentary on the need for further progress on sponsorship. This Parliament and this committee, or indeed other committees that consider public administration. I'm aware that the Finance and Public Administration Committee has also looked at sponsorship arrangements in this term of Parliament. But I think it's an important assurance that the government, perhaps the Permanent Secretary, through his reporting to Parliament, might want to offer commentary on his assessment of how sponsorship is working effectively. I think what we're seeing is progress, but more work to do. But that's transparently reported. I think it's picking up your question is a welcome suggestion.
Thank you, Mayor.
Okay, thank you. Just on this section on sponsorship of public bodies, in the full consolidated accounts that the government produced earlier in the year, which this is an audit of, it spoke there about a deep dive following concerns raised by the Water Industry Commission Scotland findings. With the deep dive, they made a risk assessment of public bodies, and they identified 9 as being rated as red. 6 of them, I think, were NHS boards. I don't know whether they were all territorial boards or not, because who were already under special escalated measures. And they said of the other 3 that were rated as red, 1 was Wicks. Do you know which the other 2 organisations were?
I don't off the top of my head, Convener, actually, but I'll just check with Carol or Richard if we have that detail.
So I can confirm one was Historic Environment Scotland.
Yeah.
I can't remember the detail of the other one. I think it would have been in relation to the budget pressures and the deliverability of savings. That tends to feature heavily in some of the assessments. There's the budget element, there's governance, and then there's culture as the different themes that they think through in terms of the sponsor bodies.
Yeah, so, and Mr Simpson is going to ask you in short order questions about Historic Environment Scotland, but this is a deep dive which took place way back, didn't it? I mean, it was presumably after the initial Wicks Section 22 report.
So apologies, it's an annual process. So there was, so it was probably the more recent one that I was referring to.
Sure.
In relation to that. But yes, it's an annual process that's now embedded within their arrangements to take the time, look at each of the arrangements for sponsorship, and assess where they believe there is risks.
Yeah, and we'll get to this when we take evidence on Historic Environment Scotland, but I suppose it's an interest in the timeline. At what point was Historic Environment Scotland identified as being a red risk, and how long did it take then for action to be taken? So, but I'm going to invite Graham Simpson to put some questions to you. Graham.
Yeah, thanks very much for being here. It is now. Thanks a lot. I'll stick to the theme then. I think I'll ask you about Historic Environment Scotland. It appears in the consolidated accounts, and as you said earlier, you've produced a report which is out I think it was out today or yesterday. Reading that report, I have to say I was aghast when I read it, and it reminded me of Wicks and the work we did on Wicks. There were some aspects of it that were very familiar. So it had no chief exec or accountable officer for 6 months. there are other aspects which I found very concerning. That's concerning in itself. Complimentary tickets were dished out for events at HES venues almost willy-nilly. So I don't know how many were involved. There were over 400 electronic purchasing cards. That maybe there still are. That involved 1 in 4 members of staff had these cards, and there are some specific examples of where spending was wholly inappropriate, including spending on a leaving do for a board member, using public money for somebody's leaving do, including a bar bill. I think some of that was repaid. Some money was spent on a replacement kitchen. I don't know whether that was somebody's personal kitchen or whether it was at an HES venue. It's not clear, but that bust the spending limit. There was 2.9 million on the cancelled Archive House project in Bonnyrigg. And then we have, and this was very familiar from the Wicks report, spending on foreign travel, almost half of which was not properly authorised. It gives the impression of an organisation where there are lax controls. In fact, it was out of control when it comes to spending. Would my analysis, would you concur with my analysis?
I think the first thing I would say is I'll have the opportunity, I hope, to give the committee much more detailed responses at a future meeting when I'll be joined by the external auditor of Historic Environment in Scotland, and she'll also be able to develop in some of the additional detail that's contained in the annual audit report, and together with some of the engagement that she's had with senior officials at the organisation. I set out very clearly, I hope, in my report yesterday of some of the significant concerns, some of the unacceptable practices, some of the risks that the organisation was facing as a result of deficiencies in governance that the external auditor highlighted in her report. We particularly draw attention to the absence of an accountable officer for nearly 6 months. And stated that it's our view that the Scottish Government should have appointed a substitute accountable officer to discharge those fundamental responsibilities that an accountable officer has of oversight of public money and how that public money is being spent to deliver the organisation's intentions. Some of the detail of the questions we can come back to you, the committee on, Mr Simpson, hopefully through that future evidence session. But we do draw attention to the arrangements in respect of complimentary tickets, oversight and policies regarding purchasing cards, foreign travel and hospitality arrangements. I would, in terms of the analogy you make to previous examples that this committee has considered, Historic Environment Scotland, perhaps like Wicks, and there are some others that we've touched on in recent evidence sessions with the committee, of public bodies who are engaging in more commercial activities, is that they have to have due regard to how those arrangements coexist with being public bodies. And I think there are lessons to be learnt here for Historic Environment Scotland, and more generally for when public bodies are quite reasonably, it's not an unreasonable activity to do, and there are significant amounts of other income. Historic Environment Scotland, for example, generated over £70 million of income from commercial sources that feeds back into public services. So a really important contribution it makes, but that is done safely and that still protects the integrity of public services and public funds. And I hope that, but maybe the one very specific question you asked I want to address is in respect of the kitchen. No, we understand that wasn't for somebody's personal kitchen. We thought, as our understanding, that it is business related.
Okay, there's a problem with the mics. You might have to turn yours off manually. Thank you. I mean, that's reassuring, but what's not reassuring is that it just appears that we have in this organisation a very lax approach to spending money. I accept it raises money, it raises a lot of money, it generates income for the taxpayer. However, that doesn't give you the right, if you work for Historic Environment Scotland, to spend money as you wish. And that appears, in some cases at least, to have been happening. That can't just have been down to the lack of an accountable officer for 6 months, can it?
What's also the case, I think, as we referenced in the report, of some of the cultural issues that need to be fully considered. And I think I welcome some of the commentary that was made by Historic Environment Scotland when their accounts were laid and yesterday in response to the Section 22 report of a planned independent review of some of their structure, culture and strategy early in 2026. There are, as we'll talk about in more detail in due course, I'm quite sure, but one of the points that we are clear about is how spending takes place, who makes spending decisions, how it's authorised, needs to be looked at as part of not just culture, but also just some of the standard aspects of policy and processes within that organisation too. So there's considerable work to be done to provide assurance to the people that work there, the Parliament and the public, that public money is being spent properly in the organisation. So many opportunities, I think, during 2026 to address the concerns that have been raised.
Okay. Look, I know we're going to ask. You're going to come back, and we'll ask you in more detail. I just want to, if I can, see if you know anything about the nature of the foreign travel that was undertaken. You know, what kind of what were these trips for? Do you have any information on that?
Well, if we can come back to the committee in the detail of the foreign travel, I think one thing I would say is that it's our understanding that, first of all, there were business cases for all of the proposed foreign travel trips. What though happened was that the business case would set out a limit on what would be spent during the course of that travel, but in a number of circumstances, amounts incurred were higher than the original limit. But that then seemed unclear about either authorisation or retrospective arrangements. So evidence, we think, of just not enough rigour around oversight or expenditure being incurred during foreign travel. So it's part of an example, just think of the need for the organisation to take stronger steps to guard public fund expenditure more closely and make sure that it's taking appropriate steps to guard against the risk of inappropriate expenditure.
Okay. I mean, it's fair to say when you come back, I think it's in January, we'll be asking for a lot more detail on some of this stuff. Okay, I'll move on. So in relation to public bodies, there are 125 devolved public bodies. Do you know what the combined budget for those are?
So the combined expenditure through the consolidated accounts, I think, as I mentioned in my opening remarks, of £56.3 billion is the expenditure. So there will be some quirks within some of that. So, for example, not all of the public bodies will be within the accounting boundary, but they still will be subject to oversight and sponsorship arrangements. I think the first section of today's report, for example, we give examples of some public bodies that are not part of the accounting boundaries, such as Ferguson Marine, Port Glasgow, CMAL, Scottish Futures Trust, that will still be subject to engagement and oversight, but not part of the overall budget that we are presenting to the committee today as part of the audited accounts.
When we when we think about public service reform, and you're always talking about public service reform, when we look at the number of devolved public bodies, do you see an opportunity for making savings there? It's an awful lot of bodies there. You know, we could be merging some functions, you could merge some bodies, get rid of some bodies, you know, that are maybe not so necessary. Have you done any analysis on that?
The size and structure of public bodies is a policy matter for the Scottish Government to determine how it wishes to discharge public services. I think what I maybe reference to Mr Simpson and the committee is in some of the public service reform strategy, the government's clear that, you know, considering the landscape of public bodies is part of its considerations. So the 125 bodies that we reference here may not be the model that the government chooses to deploy to deliver public services in future. Again, there's two parts to it. One is of changing specifically public body structures. So there's some discussions, exploratory discussions happening about single island authorities, for example, about how public services are delivered in Scotland's 3 island communities. Alongside that, there are also opportunities that sit below structural reform about sharing of public services. Whether it's, you know, back office functions, the estate, are all part of progress that can and should be made that sits below structural reform. People often say, well, you know, structural reform is a barrier that will get in the way of or distraction, and that may or may not be true. But I think what has to happen is that clearer analysis, not by me, but by government and ministers, to say what's the most efficient model to deliver that balance of local connected services, but one that also at the same time can benefit from economies of scale.
Okay, I'm going to ask you about the medium-term financial strategy, and then I will ask about workforce reform to finish off. So, on the medium-term financial strategy, I thought this paints a rather grim picture. In fact, you say the financial position of the Scottish public sector is unsustainable. So that suggests to me profligate spending habits by the government. And at a household level, if you spent more than you were taking in for any period of time, you'd pretty soon be in trouble. Now, the government's not going to go bust, but if it continues down the road it's on, what could happen?
So there's a few things. One is each year the Scottish Government sets a balanced budget. And it continues to do that. I expect that's what the Parliament will see when it considers the draft budget next month. What the government's own projections, though, and why we say, I think, a stark picture at paragraph 52, is that it's going to become increasingly hard to do so with the current arrangements. That, you know, so, and we'll see updated numbers in the new year, Mr Simpson, but currently forecasting £2.6 billion gap to March 2030 on revenue, £2.1 billion on planned capital investment to the same period. And there, of course, there are reasons for this. Some of it we've talked about already in terms of the tax base, growing the economy, changing demographics, inflationary pressures and so forth are all part of the picture of why forecast spending is growing at a faster rate than revenue sources. And part of it will be the policy choices that have been made too. So again, as I mentioned earlier this morning, a report on adult disability payment as being the largest of the devolved benefits also projects out that is going to grow at a faster rate than the equivalent consequentials that come to Scotland through the fiscal framework for social security. So there's a range of factors that I point to, but I think what we reference is to the government's proposed response to addressing the fiscal challenges are through public service reform strategy and the fiscal sustainability delivery plan. And the fiscal sustainability plan, again, you mentioned you want to come on and talk about workforce. Workforce is central to that. But as a wider suite, what we say is that it needs that level of precision and detail now to what's actually going to be delivered and when, and will that make the necessary impact in addressing the projected fiscal gaps to the end of the decade.
I mean, I know that legally the Scottish Government has to produce a balanced budget. We know that. But when you've got figures like a gap of 2.6 billion in 29-30, that's forecast. Yeah, as you say, that's unsustainable. We can't carry on like that. So I think my question is, if we continue down that road with these massive gaps and growing, what is going to happen?
So what you'll... Oh, this is speculation, of course. So in that context, I think what we've seen in years gone by is when there have been in-year financial pressures, there have been emergency budgets, and resulting in challenging decisions, I'm quite sure, for government and parliament to be made during the course of the financial year that aren't necessarily the most effective in delivering upon government's priorities, but perhaps the opportunities that most readily present themselves. And that will become a more regular feature, I would expect, if some of the pressures that contribute to the £2.6 billion aren't addressed. Of course, there's other aspects of it. The income generation will be a feature, so there's two sides of any profit and loss account. I think the government, as part of its public service reform strategy, is also looking at revenue generation as part of a means. But I think it will be a suite of measures that need to be taken, together with the requisite detail of how the government intends to bridge the fiscal gap that's set out in its medium-term financial strategy.
Okay, so if I can come on to workforce reform, because you've got a number of paragraphs in the report on that. Paragraph 56, you say the PSRS, which I'm guessing is Public Sector Reform Strategy, good guess, sets out how the Scottish Government aims to increase the pace and scale of reform. You then go on to say the public sector in Scotland is a larger proportion of the employed population than in the rest of the UK and therefore presents additional financial challenges. My question on that is, do we need to get the public sector in Scotland, the size of the public sector in Scotland as a proportion of the employed population, does that figure need to come down?
I think that's a policy choice for ministers as to, in some respect, and also part of it will be driven by demographics, some of the geography of Scotland as well. There'll be there is more dispersed population in parts of Scotland than there is in other parts of the UK. I think just for completeness on a couple of points, is that Scotland, we'd say, is 22% of the workforce that's employed in public sector. That compares to 17% in England, 24% in Wales and 26% in Northern Ireland. It's clear from the public service reform strategy that this is a focus for the government. We've touched on already the overall target of 0.5% reduction that's planned by the Scottish Government, and is also covered in the report. The government's focus to date has been reducing what's called the contingent workforce or temporary workforce, and they've made significant progress in that regard. Carol might want to come in some of the detail on that, Mr Simpson. What's not yet part of the level of change is the permanently employed workforce. Again, I think it goes back to your earlier question, if I may, actually, about the government's also been clear this is not about frontline services, but rather looking for more opportunities with which to derive efficiencies, sharing services, some case back office services. And we know that Public Finances Minister Ivan McKee has been engaging with public bodies and improving the data and understanding of what's been spent on public services. So I'm sure that will be an important part of understanding of what choices can be made in the years to come. But again, I'll pause. I think maybe Carol might not come in some more of the detail.
Thank you. So in terms of the contingent workforce, there has been a 51% reduction from the high point in March 2022, and that's updated for the statistics that were published yesterday, but there has been only a 4.4%, no, in fact 4.4% increase in the same timeline. There has been small decreases in the directly employed workforce for the last few quarters, but again, the statistics that were published yesterday showed a small increase in relation to that. So there really hasn't been the same focus or reduction in terms of the directly employed workforce. What we say in our annual audit report is the need for a strategic workforce plan that the Scottish Government doesn't yet have in place. So we make a recommendation in relation to that, because what's really important in looking at workforce reductions is that it is thoughtful and planned to ensure that it is focusing on the future skills that are needed, that we aren't removing posts that will ultimately be needed a couple of years down the line. So I think across the Scottish public sector, it needs that medium to longer term focus on future skills and ensure that's built into the recruitment decisions now to make us in a good, strong place for moving forward.
Okay. Before I move, I'm going to ask you about pay policy to end. But before I do, just to stick to this issue, I mean, if we've got 22% of the workforce is employed in the public sector, is there a target? Is there a government target by which they want to get that down? That is a policy decision. Is there a policy?
I don't know if there's a target percentage to reach. The target I would reference is what's set out in the Public Service Reform Strategy to reduce each year 0.5% of Scottish Government and related bodies non-frontline workforce numbers. And that's the figure that I think I mentioned earlier, with the anticipated savings of somewhere between 100 and 700 million pounds. But I don't know, I think it's probably a question for government rather than me, if there's a target of the percentage of people employed within public services relative to other parts of the UK. It matters though, I think, not just in a public sector context, but I think back to the questions from the Deputy Convener actually about how the fiscal framework operates, what that then means of where and what type of paid employment there is in Scotland, and then how that contributes to tax take, and then of course through to the Scottish budget.
Okay, thank you. So I'll finish up with a question on public sector pay policy. You mention it in paragraph 58, which I think is a significant paragraph. It refers to that policy, but the government essentially ignored the policy. It rolled over to unions, and that, I guess I didn't think the convener would like that one, but that's what happened. And it introduced, as you say, additional recurring financial pressures in the short term and has not mitigated the future year risks, given many of the 2-year deals agreed include inflation guarantees. So presumably you think that the approach taken there is unsustainable.
So I think that's what we look to do is give a factual commentary on how public sector pay policy was applied by Scottish Government and public bodies in respect of the uplifts for 25-26. And as you say, and beyond, given that some of the arrangements that were struck, some for NHS workers in particular, included inflation plus pay settlement arrangements. We note that clearly, given that public sector workforce is just about the largest contributor of public spending, is that this limits some of the choices that government may or may not be able to take, and it will be a contributing factor for them to manage as part of its progress over the course of the next 4 or 5 years to support fiscal balance. But certainly what we look to do is make a factual observation in that paragraph.
Yeah, but the upshot is if you ignore your own pay policy and you give awards that are out with that policy, then something else has got to give.
It'll be a bit of prioritisation, and as you've mentioned, that the Scottish Government is required each year to balance its budget.
Okay, thank you, Convener. Sorry
Okay.
for annoying you.
Thank you, Mr Simpson. I'm now going to invite Joe Fitzpatrick to put some final questions to you. Joe.
Thanks, Convener. So I just want to ask some questions about performance reporting, which you touched on earlier. Right since the start of this Parliament in 1999, there's been a desire to understand better how money was performing in terms of outcomes. And when I joined this Parliament in 2007, I sat on the Finance Committee and we heard about international best practice from, I think it was Virginia. And from that, I think there was the then Finance Secretary, now First Minister John Swinney, that was keen to try and introduce a structure, a framework that would help us better understand what our money was delivering. And from that came the National Performance Framework. So is it, to be fair, a bit disappointing that one of your key messages in the report is that the Scottish Government cannot clearly demonstrate that public spending is delivering the intended outcomes. So you mentioned earlier, and you talk at paragraph 85 about the reform strategy for the National Performance Framework. So it'd be good to understand, what are the challenges with the NPF, and what would you be hoping comes out of the review and refresh of NPF?
I think it's perhaps to address those fundamentals that you referenced with the early ambitions of the Parliament, Mr Fitzpatrick, that people who use public services, Parliament that scrutinises the expenditure to deliver them, have got a much clearer understanding of what's being achieved. It feels like it's a significant gap to be addressed. So I think, as I mentioned earlier this morning, that it's the government's intention to set that out towards the end of the summer of next year, the refresh of the National Performance Framework. We commented, Carol, you I think kind of wrote part of the report in previous years about why the previous iteration of the National Performance Framework wasn't delivering as intended. There were a number of components of it that weren't supported by good quality data, effective indicators. So the refresh is the right thing to do, to have a much clearer understanding, and to map that. It's also been a long-standing ambition to expenditure, so that the budget, when it's presented, also sets out alongside that what's intended to be delivered, how those outcomes will be achieved. So I think we feel we're in a bit of a hiatus at the moment, that for the government strategy from the budget to map to the programme for government feels like an opportunity, also on the public service reform strategy. So very clearly something we'll continue to track and to report probably as part of next year's audit.
It feels like, particularly we're continuing to have the pressures on public finance, then clearly we need to see how money has been spent. A lot of the public sector reform that we've talked about for years has also been about how we can shift to more preventative spending. I just don't see how we can do that without being able to actually see what our money is delivering, particularly when some of those preventative spends are going to be long term.
Yeah, I share your assessment. I think to move to a preventative model requires better data, better assessment of the impact of spending. And I think, as we make the point in the report that came up briefly earlier on this morning, is that government expenditure tends to happen by, on a departmental basis. An assessment of both cross-cutting risks and priorities and how to deliver against those has felt much harder and for many years. So I think, again, Carol might want to come in on this further, actually, but to just the government's response to that recommendation in the annual audit report, that will be a feature of its consideration, is a welcome one. Actually, clearly enacting and delivering upon it will be vital to bridge the gap that we currently experience. But I'd love Carol, if anything you want to say.
Yeah, so within the annual audit report, we made a recommendation in relation to the approach to cross-government priorities, recognising that within each portfolio they will realise the role they play, but it's the focus that it has if it is not their key outcome priority to deliver. It has been recognised by the Scottish Government. I know there was a recent board meeting focused solely on their arrangements round about that. What has generally happened in the past is that it's been managed through the risk management process, so cross-cutting risks, but it needs to be supported by strong governance. Coming back to the workforce plans, have to recognise those priorities and be the focus for the decisions that are being made moving forward. But the Scottish Government has accepted our recommendations, and we will, as the Auditor General has said, track the implementation.
So is that going to cover larger cross-government areas such as public service reform itself, child poverty?
Yes, I think those are the two that we called out and mentioned within the report. So yes, it absolutely is to focus on those cross-cutting areas and make sure that they have the necessary focus for delivery.
Okay, thank you.
Okay, thank you. Well, I think that exhausts our questions for this morning, but I want to take the opportunity to thank you very much indeed for the evidence that you've given us, and especially being prepared to talk about the Historic Environment Scotland report, which is only just hot off the press. That's been useful, but we will return to that, I'm quite sure, in the future. But for the time being, Carol Grant, Richard Smith, Stephen Boyle, Auditor General, can I thank you for your evidence this morning, and can I take the opportunity on behalf of the committee to wish you a happy Christmas and a peaceful New Year. And we'll now go into private session.